Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. And if you guys like investing in the most undervalued assets that I can find on the planet, subscribe to the channel, find out what those investments are, and you will be very happy that you've done so with the opportunities that we have in front of us. If you like this content, give me a thumbs up. So today I'm going to talk about market volatility. We are going into a lot of companies. They're commodity-based companies, and they are volatile. So if you don't like volatility, relax. You might have to choose some other companies. But in order to get these very outsized returns, you're going to have to live with some volatility as we go through this commodity bull market. So today I'm going to touch on market volatility. So here we go. So getting everything right. We can get everything right. Market conditions, valuations, we're in the correct sectors. We nail absolutely everything. And guess what? We are still not immune to market pullbacks. Normal market corrections, 20 to 40% corrections in the bull market are going to happen. And we are going to have to condition ourselves and train ourselves to expect these 20 to 40% market corrections. So market pullbacks. When you're going for very outsized returns, you are accepting the volatility to get there. You cannot get outsized returns without volatility. I've released what my portfolio looks like in other videos and described the breakdown. And I'll do that next slide. Not every person will be able to handle the volatility of these companies that I talk about. So you're going to have to really look at yourself and your portfolio and say, can I handle the volatility of these companies? Volatility is great on the upside, but it's an absolute bear on the downside. It can play with people's emotions. So my portfolio, I'm going to go over it real quick. I do a third real estate, a third precious metals. I do ratio investing, and I swap between them. And then I have stocks. And then my stocks are broken up as royalty companies, 401k, and then I've got 10 to 15% of that 1/3 in higher risk, very leveraged plays. I can handle a lot of volatility because I understand the value and the market conditions. That gives me the confidence and the courage of my convictions to hold these things. So I'm going to go quickly over market conditions. The valuations in commodities are looking fantastic still and are all breaking to the upside of very large chart patterns. We have all the trends in place for inflation to occur. Bond yields are going up. Bond prices are going down. TIPS, Treasury Inflation Protection Securities, are going up, signaling inflation. And a market pullback is occurring in some of the metals right now, especially gold and silver. Don't be worried. Everything's still intact. This is a normal market pullback, and you're going to have to stomach some volatility here. I get it. So I want you to adjust your portfolio if you are waking up and you can't sleep at night or you're worrying about your investments. If you're struggling to handle the market moves, I suggest to trim the companies back if you cannot handle the volatility. I don't view volatility as risk like others might view it. So what I do is I spread my bets across many companies to reduce risk of default if I'm swinging for the fences on some of these picks. Typically, if you are feeling like it's tough to handle the volatility, you need to position your portfolio size correctly. And that's probably what you're doing, is you might be a little bit too much into these higher volatility companies. Short-term problems. This is if we were to have a short-term problem. Even if we get short-term problems, I'm sticking the course here. I'm going to acquire on pullbacks even if we see a major pullback. I'm playing the long game of the green revolution coming. That's what my focus and vision is, on that green revolution. It's not about looking 6 feet ahead of me and every step I take, I'm looking at the ground. I'm looking way out, many miles ahead, and positioning for what's coming way out there. We have a commodities problem everywhere, and prices will go higher. Real estate's going to need more new homes at some point, and they'll get built, and it will be inflationary. We have underbuilt for 10 years already. I highly doubt that's going to continue forever or even another 10 years. It's going to be built, it's going to be inflationary, and it will come. So the conclusion here is still, it's game on in terms of inflation and leading indicators. Valuations are still cheap. That's where we need to be. Market pullback in the metals is happening now, especially for gold and silver. And look for good buy entry points or accumulation areas. This is where you look at indicators and market conditions to keep the course. If they're all in check, if they're all intact, the market conditions and valuations, if everything's good, what you should be doing is opposite of what your emotions are telling you to do if you're a new investor. If everything looks bad and you're like, oh man, what should I do? Should I sell? More than likely you should be adding in and cost averaging in. And that's why I continue to say cost average in. Get your shares cost average in slowly. This isn't, you don't have to go all in at once. Buy it, and just keep buying in on pullbacks. Or if you see strength, buy into strength. That's much easier, psychologically to handle when you're buying into strength and seeing it, move up very soon or very quickly. So typically, if you're a trader, you buy into strength. If you're an investor, you kind of just cost average in wherever you think it's cheap. So volatility, it's there. We've got market pullbacks. Don't give up on it. The market conditions are still intact. So everything looks good. Remain calm. Look at the valuations and focus. Get your vision out there, way out in the future, and look at those deficits out there. Keep your mind rolling on what's out there. We're positioning our investments for what is going to come in the future. So that's the whole point of this, is positioning for the future to profit. If you guys like this content, give me the thumbs up and subscribe to the channel if you haven't already. I appreciate you guys listening. This is Finding Value.